Assalamualaikum and salam sejahtera. This is the first part of topic 2 MFRS138 intangible asset, and we are going to read together with MFRS136 impairment of asset, especially those that relate to intangible asset. Alright, so what are the coverage for intangible asset? So the first one, of course, we are going to look at the definition of intangible asset. Alright, and then number 2, we are going to look at the recognition of intangible asset. Alright, okay, and then at the same time we are going to discuss also about the measurement of intangible asset. Alright, and then number 3, recognition of expense. Number 4, subsequent measurement. Alright, so subsequent measurement of intangible asset would be similar to the subsequent measurement of PPE. So basically we're going to talk about the same thing. Alright, and then number 5, the useful life of an intangible asset, the derecognition of an intangible asset, and the last one, presentation and disclosure of intangible asset in the financial statements. Alright, so for the first part, okay, of topic 2, okay, we are going to look at the definition, okay, recognition and measurement. Alright, okay, so what does it mean by intangible asset? How it differs from the other types of asset? Okay, so an intangible asset is an identifiable non-monetary asset without physical substance. Okay, when we talk about property, plant and equipment, okay, I keep highlighting the word tangible item. Okay, tangible item. So PPE is tangible item, item that you can see, that you can feel, that you can touch. Alright, but intangible asset, alright, so the name is intangible, so meaning that, okay, something that you cannot see, you cannot touch, you cannot feel. Alright, so an intangible asset is an identifiable non-monetary asset without physical substance. So intangible assets are items without physical substance. Is it an investment? No, it is identifiable non-monetary asset. Okay, whereas monetary assets are money held and assets to be received in fixed or determinable amounts of money. That is different. Alright, okay, so common examples of intangible asset are computer software, patents, copyright, okay, films, customer lists, okay, rights, license, quotas, okay, etc. Okay, something that we know we have that item. Alright, we incur costs for the item, we incur costs for the patent, okay, for the copyright, for the trademark. You have to go through a very long registration process for all of this, okay, to belong to you. Alright, so the question is, can we recognize the cost that we have incurred for intangible asset as asset, as intangible asset? Alright, okay, alright, so for the item, okay, of intangible asset to be recognized as intangible asset, to be recorded in statement of financial position under non-current asset, okay, the item must meet the recognition of intangible asset. Okay, so what about the recognition of intangible asset? So if I were to ask you the recognition of PPE, most of you would probably give me the answer that, okay, the recognition criteria for PPE, there are two recognition criteria. The first one is that probable that future economic benefit will flow to the entity and the cost can be measured reliably. Okay, basically for intangible asset, the recognition criteria are the same. Okay, the recognition criteria are the same. Okay, however, for an item of intangible asset to be recognized as intangible asset other than met the recognition criteria, the asset also must meet the definition of an intangible asset. But the question is, which definition of an intangible asset? Is it identifiable non-monetary asset without physical substance? No, we are not talking about that definition. That is definitely the definition of intangible asset, but the definition for the recognition of intangible asset, okay, then you have another definition. All right, so in other words, okay, for an item of intangible asset to be recognized as intangible asset and to be recorded in the statement of financial position as intangible asset, it must meet number one, the definition, and number two, the recognition criteria. All right. So this recognition of intangible asset applies to initial costs, all right, to the initial costs and also to subsequent costs. All right, whether you acquire the intangible asset or you generate internally the intangible asset. This would be similar to PPE. Either you acquire the PPE or you self-construct the PPE. All right. Okay. So again, for an item of intangible asset to be recognized as intangible asset and to be recorded in the statement of financial position under non-current asset as intangible asset. Okay, the item must meet the definition of intangible asset and meet the recognition criteria of intangible asset. And this recognition applies to initial costs and also subsequent costs. All right, so for subsequent costs we have to check first, all right, is it met the definition, is it met the recognition criteria. Similarly for the initial costs, okay, we have to check first if it met the recognition and the definition of intangible asset. Only then we can create intangible asset account. All right. Okay, so what are the definition of an intangible asset? What is the definition of an intangible asset? There are three important keywords here. The first one is identifiability, control over a resource, and existence of future economic benefits. All right, so you must make sure that your intangible asset, okay, is identifiable, controllable, all right, and probable that future economic benefit will flow to the entity. All right, so when we talk about identifiability, what does it mean by that? Okay, the item that we have, the item of intangible asset that we have, we must make sure that the item is identifiable, meaning that we can easily, all right, identify the item. Okay, we can easily identify the item. All right, so how to know the item is identifiable? Okay, the item is identifiable if it either okay, either one, right, separable, meaning that capable of being separated or divided from the entity and sold, transferred, licensed, rented, or exchanged, either individually or together with a related contract. Okay, identifiable asset or liability. Okay, regardless of whether the entity intends to do so. Alright. Okay, so meaning that it is separable. Okay, you can separate the item of intangible asset from the entity. Okay, you can sold, you can transfer to the other entity. Okay, you can license, rented, or exchange. Okay, or the item of an intangible asset, okay, arise from contractual or other legal rights, meaning that, okay, regardless of whether those rights are transferable or separable from the entity or from other rights and obligation. Okay, meaning that as long as you have an evidence that you have contract or legal rights over the item, okay, that is the evidence that the item is identifiable. Alright, so the next one is control over resources. Control over resources meaning that by having that intangible asset, you have the power to obtain the future economic benefit flowing from the underlying resource, flowing from using the asset, from using the item of intangible asset. Alright, and then you have the power to restrict, okay, others to use to those benefit. Okay, meaning that if you are registering your trademark, only you can use the trademark. All right, and then from using the trademark, you have the ability to generate revenue. Okay, and other people cannot use your trademark. You can stop them from using your trademark. Why? Because maybe you have the contract, you have the legal rights over the trademark. All right, okay. Okay, future economic benefits. Alright, so the future economic benefits flowing from an intangible asset may include, right? So you have to show the evidence of future economic benefit. So in what way you can show that the intangible asset, okay, would give you future economic benefits. Okay, so it includes revenue from the sales of product or services. Okay, let's say for example, by putting side by side different products from different business. Okay, so by having your trademark, okay, you are able to sold more compared to the other product. So you are showing that you are able to generate revenue, okay, from using the intangible asset. Okay, okay, so it can brings you a cost saving or other benefit resulting from the use of the asset by the entity. Okay, all right, if let's say for example the item of intangible asset that you have does not meet the definition of intangible asset, meaning for example you does not have control over the resources, even though you are using a special trademark, but you have no right to stop others from using the same trademark, most probably because you did not register for the trademarks. All right, okay, so if you does not have that, okay, if you does not have um, if you does not met the definition of intangible asset of identifiable, controllable and probable of future economic benefits, then any expenditure that you incur to acquire or to generate intangible asset internally, okay, that cost would be recognized only as an expense when it is incurred. All right, okay. What about the recognition criteria? Okay, the recognition criteria of intangible asset. Okay, number one, probable that expected future economic benefit attributable to the asset will flow to the entity, and the cost of the asset can be measured reliably. Alright, so this recognition criteria would be similar to MFRS 116. Okay, except that for intangible asset, other than meet this recognition criteria, it must also meet the definition of intangible asset for the recognition. Okay, alright, what does it mean by expected future economic benefit? So how to assess the probability? Okay, using reasonable and supportable assumption, okay, that represent management best estimate of the set of economic condition that will exist over the useful life of the asset. Okay, so greater weight is given to the external evidence. So meaning that you have to show that you are able to generate money from using this item of intangible asset. Okay, all right, so that that is for um, recognition of intangible asset. Okay, all right.